This is the Asia Trade. I'm Avril Hong in Singapore.
And I'm Paul Allen in Sydney. The top stories this hour. Asian markets set to rebound as traders look ahead to Nvidia's earnings. The dollar and longer-dated treasuries under pressure following President Trump's push to oust Fed Governor Lisa Cook. Trump gearing up for a legal fight after Cook suggests she will challenge the action. Sources say his administration is looking to exert more influence over the Fed's regional banks. And we're in the thick of earnings season in China. Meituan set to report later, while Ping An Insurance's first-half profit falls due to market volatility. Avril.
Yeah, Paul, take a look at how we are shaping up for the Asia session after U.S. stocks inch higher overnight, with investors looking ahead to Nvidia earnings, as well as later in the week, the Fed's preferred gauge of underlying inflation. And with the Fed turmoil in the background amid all this, we are pointing higher on the ASX 200 and on the Nikkei. And worth noting as well how we saw the dollar underperforming, but the yen, after initial strength following the news that Trump was moving to oust Lisa Cook, is actually reversing the gains from yesterday. Let's take a look at what we're seeing on U.S. futures and assets as we wait to see some further developments surrounding the Federal Reserve. Of course, the long end is really what came under pressure. We saw them on the 30 years extending the slide that we've already been seeing this year, with the inflationary backdrop along with the pressure on the Fed really in scrutiny here. Paul.
Well, President Trump says he's ready for a legal fight with Fed Governor Lisa Cook after he moved to oust her from the central bank. It follows allegations that she falsified mortgage documents.
Seems to have had an infraction, and she can't have an infraction, especially that infraction, because she's in charge of, if you think about it, mortgages, and we need people that are 100% above board, and it doesn't seem like she was.
All right, for more, Bloomberg's John Authors joins us now from New York. So, John, give us a sense of how long this legal battle could potentially go for, and what are the broader implications?
Well, potentially could go all the way to the Supreme Court if Lisa Cook is as serious as she seems to be. And it's very difficult to see how that will come out. There are really pretty good arguments either way as to whether what she did really rises to the level of being sufficient cause to fire a Fed governor. It seems to be plain that the president does have the right to fire for cause. There is literally no precedent at all for having done so. So I think the risk is that this could drag on for a matter of months and could go to the Supreme Court. I think longer term, obviously, the issue is of the Fed's independence as an institution. Elsewhere in the cabinet meeting, the president actually said in as many words, we're going to have a majority on the FOMC, and that this would be a great thing that would allow them to cut rates. That's obviously a very significant step forward in the politicization of the Federal Reserve. You can argue, given that the Fed's record hasn't been great in the last few years, that maybe this might be a good a good outcome. But the fact that it's being done in this way by the executive finding ways to take a majority, to take control of the institution as it is, rather than through a big measured political process to reform the Fed, reform its mandate, reform its constitution, its governance, is very alarming. That's not ultimately going to make the markets feel any calmer.
At the same time, John, we're also hearing how Trump and his team could be exploring ways to appoint, beyond the 7-member board, the 5 members on the committee as well. I mean, how likely are we going to see something in that direction?
I think it varies. If you get majority of there are 5 governors, there are 7 governors, and then there are 8 presidents of the regional branches of the Fed. Each of the 7 governors gets a vote every time on the FOMC, and the regional governors, the regional presidents, rotate. 5 at any one time get a vote. Next year is when the regional president to get reappointed. And while this has normally been a completely non-political process driven by the boards of their respective branches, the governors do have a potential veto. So if they get candidates who really don't seem to be palatable, one can assume at this point that they would veto them and that we would get a standoff until they got a candidate they were comfortable with. So plainly, that's the desire, that's the intention. Generally speaking, the regional presidents tend to be more hawkish. They tend to be more old-fashioned about wanting to fight inflation and less interested in sort of grand macroprudential risks than the governors who sit in DC. So that will naturally become the next front. But next year there is a very simple opportunity for the administration to get a lineup that it's comfortable with.
Fed independence really coming under fire potentially here. John, thank you so much for your analysis. Bloomberg's John authors for us. And as we've been discussing, this is coming after the U.S. president has already been ramping up pressure on the Fed, criticizing Chair Powell and attempting to remove Governor Lisa Cook. The moves risk driving up long-term borrowing costs, potentially weighing on financial markets and the broader economy. Let's bring in Bloomberg MLive strategist Mark Cranfield for more. So we're already seeing that playing out once again on the long end in the U.S. How much further do we go from here?
Well, you might think that the curve is steep at the moment, but if you look back over the past couple of decades, it can go much, much steeper than what we're seeing at the moment. We've seen the Treasury yield curve more than 300 basis points steep, even towards 400 basis points. So potentially a very long way to go. And what investors are grappling with is partly what John was saying there also, but the meeting of fiscal and monetary policy, central bank policy and government policy, and it's swinging more in favour of government policy. That makes it tougher for investors to make an independent decision about where to place their money. Usually, central bank policy making is more transparent. Usually, they're looking at data, they tell you what they think of the data, and you know where to go with your investments. And it usually means that the returns, in terms of how it is in relation to inflation, that kind of thing, are the right pricing for the period, the duration that you're taking. As soon as fiscal policy starts to take over, obviously there's a political skew to that, and it becomes much more difficult to read. What is it the government is trying to do for their benefit as much as for investors' benefit? And that's when you get this nasty meeting, which from a bond market point of view doesn't give you the value that you expect, so you want a bigger premium. If the further you go out the curve, the more you want to be compensated for the risks that you're taking. And that's exactly what we're seeing now. And at the moment, there's no end in sight, because the government seems to be increasingly wanting to do more in terms of persuading the central bank, as John was saying, to do what they want rather than what is correct in terms of the data they're seeing. That's not a good situation for investors.
Mark, at the other end of the curve, though, we're seeing very much a risk-on sentiment. We've got equities higher, even the Russell is higher as well. So, in the short term, does the market like this idea of a Fed that gets politically pressured to slash rates?
Equity market definitely enjoys the fact that short-term interest rates could get lower and maybe continue to be cut going into next year. That clearly is a positive, because if you're an equity investor, one of the things that you're comparing is what's your potential dividend yield on the stocks that you're holding compared to short-term interest rates. And clearly it's starting to work in your favour. Plus, you still have this tremendous AI-driven momentum globally, not just in the United States. We're seeing it play out in China especially as well. The investors are still willing to throw a lot of money at companies. We've got Nvidia coming up later today, of course, is the prime example. Companies that can make money out of the whole AI tech story. It doesn't seem as though we're anywhere near the end of that game, and people want to continue to be fully invested in that space. So in a way, American companies, the economy is doing very well, the numbers are still strong. There's no reason why American companies can't continue to make decent money. Global companies are also in good shape as well. So the equity market, in a way, is in a slightly better place. It's kind of immune to some of the things that we see going on. If we get a major meltdown in bond markets, the kind of thing we saw in the UK a few years ago with Liz Truss, that, of course, would upset everybody. But that isn't the case at the moment. Yields are grinding higher, at a fairly sustained basis. It's not out of control.
At the same time, though, on the flip side of this, are equity markets being a bit too complacent? We've seen this summer calm. The VIX has come down. Hedge funds are shorting the VIX at the levels we haven't seen since 2022. I mean, what is the risk here?
A lot. And there's a tremendous amount of complacency in here. When the change comes, it will be very abrupt and it will be shocking to a lot of people. One of the things that is driving the VIX down is that investors, in a way, are so confident that the equity market is going to continue to grind slowly higher. They're willing to sell volatility, thinking that nothing can go wrong. So it's a slightly distorted picture, because VIX coming down means that somewhere people are selling options on the basis that they expect the market to stay high and continue to go a little bit higher. That's a dangerous game, because when it reverses, volatility will go up, those options will suddenly get a lot more expensive, people will have to scramble, and that will reinforce the bearish signals coming out of the market. Saying exactly when that will happen, of course, is the tricky part. And for now, investors have a relatively short-term horizon. They see the Fed coming up in September, they expect a rate cut, they think it's plain sailing until then. What happens after that could be completely different.
At the same time, we are also watching out for developments in Europe, out of France, the government, another risk there, and then in the UK as well. So overall, is this a march on long and higher global bonds?
You haven't even mentioned Japan.
That's a good flag. And Friday, we have those CPI numbers.
We do. And September is a full suite of Japanese bond auctions. Every part of the curve, including the 40-year, which is going to be extremely difficult. So already there's nervousness in Japanese market. We have a very good story on Bloomberg today showing, it sounds a bit technical, but investors are already selling bonds back to the central bank because they want to clear the decks ahead of this big auction calendar coming up in September. It's not an ideal scenario. They're concerned that the Bank of Japan is taking their time. Even America, Treasury Secretary has told them they're behind the curve. Clearly, Japanese investors are coming to the same conclusion. They want to see the Bank of Japan do more to get in front of inflation. The longer they take, the more discount people will see in the Japanese curve. Investors want to get plenty of space because they think yields are going to go higher, and there's a lot of bonds to be sold in September. Even the Ministry of Finance has asked for a bigger budget because it's having to pay higher financing costs from the yields that have gone up already. At the moment, it's a catch-22. The Bank of Japan really need to step in and get their hike done to help the market in a way.
All right, Bloomberg and Live strategist Mark Cranfield there. Still to come on the Asia trade. Robertson Stevens weighs in on risks to the Fed's independence. JPMorgan Asset Management highlights opportunities in Chinese equities. Also, we're going to unpack the outlook for U.S. trade ties with former Korean negotiator Seok Choi. We're also watching out for this critical test launch for SpaceX. Third time's a charm. Starship rocket is due for liftoff this hour. We'll be tracking that, bringing you live pictures of the launch, of course, if it happens. We have more ahead. This is Bloomberg. Nvidia is set to deliver its earnings report on Wednesday, and investors will be watching on how the US-China rivalry is impacting growth. Now, this chart shows the stock's tendency to move sideways to down ahead of results. Bloomberg's technology reporter Ian King joins us now from San Francisco. So, Ian, what are going to be the key areas of focus for investors?
Yeah, I mean, the overarching thing that investors really care about here is this massive flood of investment that we've seen in AI-related hardware continuing? Is it continuing to deliver that massive growth that Nvidia has exhibited over the last few years? And that's really what they're concerned about.
What about the concerns about the China business? There's a lot of talk or question marks around its ability to serve that market. What are you expecting to hear from them on that?
Yeah, Avril, I mean, that is, if anything's going to muddy the waters, it'll be China. As we've seen, there's been a lot of government action, whether it's in Washington, whether it's in Beijing, that's had a significant influence on NVIDIA's ability to do business in what is the world's largest market for semiconductors. And you've got analysts at this point saying, look, we just don't know. We don't know how to project this. We don't know how to put any numbers on this. We really need the company to help us out. And what we've seen from the industry itself is that they're struggling as well, because as fast as these changes come, and they can be in a matter of weeks or a matter of days from the government, you're looking at 3 months to make a chip, 3-4 months to make a chip to ramp up production. So there's a lot of mismatches going on and a lot of confusion there.
Also, Ian, when it comes to Nvidia, there's always sky-high expectations. How does Nvidia do with its performance when it comes to meeting those numbers?
Yeah, I mean, numbers are important, obviously, but what the expectation has been from investors has been said a couple of years ago, which is it's not only necessary for them to beat, it's necessary for them to go blowing past these numbers. I mean, they're at a revenue level now that in a quarter where they were barely there for a whole year just a few years ago. So you could argue that this kind of growth is numerically unsustainable, but that's where investors are, and they want Nvidia not just to beat them by 1 or 2% and be happy with that. They want beats that, are billions of dollars above where expectations are.
Ian, I wonder if you could also weigh in on Nvidia's suppliers. I mean, what will they be paying attention to out of this earnings release?
Yeah, I mean, in your area of the world, TSMC is obviously the most important supplier to Nvidia. Nvidia doesn't make chips. TSMC is obviously its chief outsourced supplier. We saw recently from TSMC them say, hey, everything's great on the high-end AI-related demand. Now we want Nvidia to confirm that, and that will obviously help out TSMC confirm their story and keep things rolling on that end.
Ian, thank you so much. Bloomberg's Ian King. Now, of course, chips have been front and center when it comes to the U.S. Geopolitical backdrop. In the meantime, we're also hearing on the tariff front, and we know how the U.S. is set to implement a 50% tariff on Indian goods as of Wednesday, a move New Delhi has called unfair. And this would mark another development in President Trump's attempt to recalibrate global trade. Let's bring in chief economist at Bloomberg Economics, Tom Orlake. So, Tom, there is a lot going on. We have India potentially getting hit by double the rate of tariffs. South Korea came away from that visit with a positive tone and a deals bonanza. And then we have the Chinese trade negotiator headed to the U.S. potentially. I mean, what is your assessment of the state of play as things stand?
So a huge amount going on in U.S. trade negotiations, Avril. India getting whacked with 50% tariffs. Korea, as you mentioned, coming away from that summit meeting, committing to a number of big purchases from the U.S. China negotiations continuing. I think some important differences across those countries. China views itself as a great power peer of the United States. India views itself as a rising great power, neither of them really willing to be pushed around, and both of them paying a price in considerably higher tariffs than most other US trade partners face. South Korea, on the other hand, firstly, an economy hugely dependent on trade. Secondly, national security hugely dependent on that US military presence to stave off threats from the north. So Seoul very much taking the path of least resistance. I think also an important commonality across Korea, India, China, and all the other trade deals that we're seeing. The US, which for decades operated on free market, open for business principles, is now very much a pay-for-play economy. You want to do business in the US, you're paying tariffs, you're making purchase agreements, you're agreeing to billion-dollar investments. That's a big shift for the US and a big shift for the operation of the global economy.
Yeah, there's also a fresh round of tension emerging between the EU and the US as well, this time on tech regulation. What's driving this and how does it get resolved?
So Brussels and Washington, D.C. have very different incentives and very different perspectives on global tech. The US is home to the world's tech champions, Amazon, Alphabet, Meta. Their view is this should be free market principles, let the entrepreneurs do their thing, everyone's going to be better off. Europe hasn't really managed to create any of its own tech champions, and perhaps not unrelated to that, takes the opposite side of the debate. So the focus in Brussels is very much on some of the harms we see coming from social media, some of the risks from the monopoly position that some of these tech champions have. So what's changed under the Trump administration is a greater willingness from the US to punch back. So what we're hearing is President Trump and his team saying, sure, you go ahead and regulate and tax global tech companies, US tech companies, but if you do that, you can expect retaliation, you can expect to be facing higher tariffs for your companies when they sell into the United States.
Among US tech companies that have been in the spotlight recently, also Intel, with the government set to take a stake. We're also hearing how the Commerce Secretary Howard Lutnick has hinted at government stakes in US defense firms. How likely is this? How big a shift would this be?
So, Avril, it's always hard to tell the difference between the kind of the carefully considered policy position and the offhand remark in the media moment. So we'll see how this has played out. We'll see how this plays out. But as you mentioned, the US has taken a 10% stake in Intel, and we have had Commerce Secretary Lutnick hinting that something similar might be on the cards for defense companies. Now, you can make an intellectual case for a government stake in the big defense contractors. Companies like Lockheed Martin, for example, a huge share of their revenue comes from the government. You can make a case that the taxpayer needs to have a guarantee that it's being spent efficiently. And of course, national security is an issue which in many ways transcends commercial interests. So you can make an intellectual case for a government ownership stake. At the same time, I think it's also important to recognize that on Intel and on defense contractors, if that's the way things go, this will be a really seismic shift for the US. Are we moving all the way from Milton Friedman to Karl Marx as the kind of guiding light of US economic policy? Absolutely not. But certainly government ownership stakes in big private companies is an important departure.
All right, Chief Economist at Bloomberg Economics, Tom Orlick there. We have more ahead on the Asia trade. This is Bloomberg.
You're watching the Asia Trade. Here are some stories we're following. French Prime Minister François Bayrou is under pressure as opposition parties unite against him. The far-right National Rally, leftist France Unbowed, and the Socialist Party are all planned to vote against Bayrou in next month's confidence vote, potentially forcing his government to resign. Markets are already reacting, with French stocks slipping and bond spreads widening, signaling investor concern over the country's rising debt. Australia has expelled Iran's ambassador after intelligence linked Tehran to anti-Semitic attacks on Jewish sites in Melbourne and Sydney. Prime Minister Anthony Albanese called the act dangerous aggression by a foreign nation on Australian soil. The envoy has 7 days to leave, and Canberra has suspended its embassy operations in Tehran. Iran has called the accusations baseless and has vowed to respond. Ukraine's president says China's Xi Jinping sent him Independence Day greetings, the first known contact in more than 2 years. President Volodymyr Zelensky shared the note on social media, saying he appreciated Xi's outreach and highlighted mutual interests in advancing bilateral ties. The message comes just days before Vladimir Putin travels to Beijing for a major summit. Paul.
Right, let's get you live to Starbase in Boca Chica, Texas. Then there you see it, the largest flying machine ever built. That is the Starship rocket, lined up for its 10th test flight, and this will be the third attempt after 2 earlier attempts this week were stood down, firstly with an issue with some of the ground infrastructure, and then yesterday there was a cloud in the wrong place. So hopefully third time's the charm for the launch of the giant Starship rocket. It's hard to understate the superlatives when it comes to this thing. It's 123 meters high. That's 403 feet. Bigger and more powerful than the Saturn V rocket that took astronauts to the moon, which was more than 50 years ago now. So there you have it. We are counting down. 50 seconds to go, April.
Yeah, and hard to overstate as well the significance this is going to be for SpaceX's ambitions, and particularly for Elon Musk to potentially one day somehow populate Mars. And this is worth noting coming after earlier in the week that ground-side liquid oxygen leak that needed to be sorted out. So, as you say, potentially third time the charm. This is the 10th test flight, as you say. This is following on from already 2 flights this year that actually blew up within minutes. And then the third one actually spun out of control. So we are counting down. The weather looks pretty fine. We could potentially see this liftoff. Take a listen.
4, 3, 2, 1. We have liftoff.
Pitching downrange.
Booster chamber pressure nominal.
Seconds into flight, 33 out of 33 wrapped engines.
Power and telemetry nominal.
Getting good call outs, healthy systems on the booster as it starts to pitch over the Gulf.
Well, it never fails to impress, these images. That is the site of Starship successfully clearing the pad on its 10th test flight. That rocket has twice the thrust of the Saturn V rocket that took astronauts to the moon back in the late 60s and early 70s. And the picture of it taking off there, you can see all 33 Raptor engines are lit, so everything appears to be normal at the moment. But there were a few setbacks on the last 3 test flights, which all ended in failure, as Avril mentioned. The flights before that did show some very promising progress, however, with the giant booster being caught by the launch pad, those giant mechanical arms known as the chopsticks. We're not going to see that today. The plan today is to run a series of tests on the booster after that separates, and that will splash down in the ocean. And then the intention is that the upper section will continue for a partial orbit, deploying some dummy satellites through what's known as the PEZ dispenser door. And then another number of tests will be conducted as well before that section too splashes down in the ocean, Avril.
Yeah, and you were talking about some of these technical aspects of the rocket. As you say, it comprises of the Starship's upper portion and its super heavy booster that is the centerpiece of SpaceX's ambitions to put huge numbers of its Starlink internet satellites into Earth's orbit and then hopefully one day transport humans to the moon and eventually to Mars. Now that we have liftoff, this mission is expected to last just over an hour, and it is expected to end with the spacecraft performing a controlled splashdown in the Indian Ocean. And of course, we've been seeing how the company has really used these recent failures as sort of learning opportunities that it can apply to future launches. And we also saw how Elon Musk took the step to reassign those engineers from the Falcon 9 program towards this very project that we're seeing a successful launch of and in space at the moment, Paul.
Yeah, everything going to plan at the moment. We just saw stage separation there, so the lower section, the booster, now on its way back to Earth. But as I mentioned there's not going to be any catch attempt today. That's going to land in the ocean after a series of tests. And the upper section will continue on its way for some time. But you mentioned the the way that SpaceX has responded to those recent failures, Averill. Often Elon Musk's solution to these sorts of problems is to throw people at it. So 20% of the engineering group that had been working on Falcon 9 got reassigned to Starship for 6 months after those last 3 setbacks to get on top of some of the problems. People familiar with the matter inside SpaceX say that may see some planned launches of the Falcon 9 rocket pushed out. And the Falcon 9 is, of course, now SpaceX's workhorse rocket that's been taking most of those Starlink satellites into space. Also very key for getting NASA astronauts to and from the International Space Station. So there might be a bit of a setback to plans for Falcon 9 launches, but SpaceX has such a huge lead over its competition in this space, it does have capacity to do that. Right now there's 8,000 Starlink satellites up there, and the plan is for many, many more to come. But in terms of some of those setbacks, again, this is how SpaceX rolls. Rapid iteration and rapid failure in public. They're not afraid to make mistakes, Averill.
Yeah, to your point about how Elon Musk's solution to the problem is to throw manpower or resources into this, I mean, it's worth noting this is still one of the world's most valuable private firms. We are looking as well at how the Raptor engines, as you mentioned a short while ago, ignited during that hot staging separation, and the Super Heavy is boosting back towards its splashdown. It's worth noting also that Starship will attempt to deploy 8 dummy satellites that are similar in size and weight to the future Starlink internet satellites that the company hopes to launch. And maybe we see once again it performing some experiments with the Starship's heat shield tiles. And of course, these cover the side of the vehicle. They're meant to keep the spacecraft from overheating when it re-enters the atmosphere. So we are going to be keeping tabs, of course, of the splashdown that is hugely anticipated. Paul?
Yeah, there you can see the Super Heavy booster making its way back through the clouds. A number of those Raptor engines have been relit, so this will be a controlled descent back down into the ocean. And in terms of those last 3 setbacks, you see the headline on the screen there. Everything's looking good today, and there you have engine relights on the booster as it slows its descent. A lot gets made in the media. It always makes a good headline when something explodes or fails. You can see the ocean there. That's a very nice shot. But yeah, this is very much how SpaceX rolls, and they have, of course, the Star Factory there at Boca Chica as well, and that is just cranking out engines and rockets at a staggering pace. This is version 2 of the rocket. Version 3 is already in the works. The Raptor 3 engine has not yet been used either. That's going to have even more thrust and be even lighter than the Raptor 2. There we see we've lost the image there. Presumably means the booster is now in the ocean, Averill, but we'll be coming back as we watch the progress of the upper section around the Earth. We have more ahead on the Asia trade. Oh, no, we don't. This is Bloomberg.
Let's take a look at how global bonds are faring, because, of course, the pressure wasn't just on U.S. 30 years overnight, which extended their slide from this year. We're also seeing concerns about political risk, inflation from places such as France and the U.K. For the moment, in the G10s in the Asia Pacific, we're seeing the 10 years in Australia taking a little higher. But as our analysts have been highlighting, Japan is one to watch out for. We do have those CPI numbers at the end of the week. Now, in the meantime, it's really been the backdrop of concerns about Fed independence. The Trump administration has been reviewing ways to exert greater influence over the Fed's 12 regional banks, potentially extending beyond personnel appointments in Washington, and this follows the president's move to oust Fed Governor Lisa Cook as pressure mounts on the central bank. Let's get more from Jeanette Garretty. She's chief economist at Robertson. Jeanette, really good to see you. So let's start off first because there's this pressure, I guess, on the Federal Reserve politically. But how would you assess the risk that all this would actually stoke inflation and potentially higher longer end rates?
Well, it's going to be a critical piece of data at the end of this week here in the United States with the inflation numbers that will come out for July. This is the Personal Consumption Expenditures Index. If those numbers come in as they've been tracking, which is about 2.75% inflation trend, I think the Fed will be able to continue to talk a line of supporting, protecting employment growth in the United States, and that may make some of this interesting talk about controlling the Fed go a bit away. We'll see how that plays out. The other issue here is sort of all eyes on the bond market and what the bond market will be saying about this debate. It's a little bit too soon, I think, to tell. There's probably some assumption out there that this is a lot of rhetoric at this moment, but waiting to see what actually is proposed to happen. In the United States, this is the last week of summer, effectively. A lot of people are away, so it's kind of quiet, but I do think things will heat up as we get towards the end of the week and this ongoing discussion about the relationship between the Fed and the White House plays out.
What is your sense of how much higher longer-term rates could go? And of course, we watch this because of what this means for U.S. borrowing, mortgage rates. I mean, there's so many implications here.
There are a lot of implications. And yet I think one finds that people have been so focused on sort of other things, especially domestically in the United States, great deal of focus on, well, employment trends. We will get at the end of next week the employment numbers for August. And I think people are sort of looking at that, looking at the stock market. And up until very recently, the stock market has been signaling that everything is mostly fine. And I think reflecting the fact that this economy, even with some slowdown in some sectors, is growing at probably 2 to 2.5% growth rate for the third quarter. And that's largely thought to be good. But the bond market is going to be very particular about what is happening with Fed independence. And some of the heat has been taken out of that by announcements from the Congressional Budget Office this week that tariff revenues over the next 10 years should have a significant impact on the national debt and on deficits going forward. So that was absorbed as good news by the bond markets. Now this debate about Fed independence kind of working the other way. It's a little too soon to tell where this is going to go. As we all know, bond markets can go places really fast, sometimes surprisingly.
Yes, the bond market has forced a back down from President Trump in the past, most recently over tariffs. Where would you place the odds of this happening again when it comes to Fed independence? Because, as you say, it just seems to be sitting back and waiting at the moment.
I think the problem there is that the phrase back down is not something in the White House's vocabulary. They're very sensitive about it. And the more that sort of thought plays through, I think the more likely they are to dig in their heels. Having said all of that, there are very wise voices in the White House that continue to advise you have to pay attention, you have to be careful. Those borrowing costs are very critical to the ongoing health of the U.S. economy.
Well, we've got a big piece of data coming up this week. It is, of course, the Fed's preferred inflation gauge, the PCE deflator. That is expected to pick up a little bit. So more urgently than Fed independence, what's the story on inflation? What are you expecting from that read, and how's that going to inform the next decision?
Yeah, I'm expecting a little bit of pickup in certain sectors. There are some other sectors that are working against those increases, specifically the numbers coming out of the housing market in the United States, because of the way they come into the calculations, is kind of pushing the other way. I think the end result is going to keep it at 2.75%, somewhere in that range, core and top line number. As long as it hangs in there, even though that is a long ways away from 2%, I think that will be a good number for the Fed going into its meetings in September. If it comes in much higher than that, it's going to be a very wild debate, because then what, in fact, will the Fed do? But that's not the signals we're getting right now on inflation. We'll see if that plays out in those numbers.
What is your sense of the extent in which the Fed is still trying to get inflation back down to 2%, and where is the neutral rate in all this?
Two great questions. I believe that my sense of what the Fed feels about 2% has got to be what the Fed tells me they feel about 2%. That is still their target. And they haven't wavered from that, and I don't think any actions they take in September should indicate that. They could cut rates in September and still probably be maintaining what would be judged to be a modestly restrictive policy. With regards to the neutral rate, this is actually maybe the biggest challenge of all, because nobody directly measures the neutral rate. And as Chairman Powell has said, there is some thinking that maybe we are very close to the neutral rate right now, given that the economy has still been growing very well. It's the jobs numbers that have called that into question recently. And that's why, although the inflation numbers at the end of this week will be very important, the numbers for employment in August that come out a week after this are really the big numbers. Because if those numbers stabilize and show ongoing job growth, then the Fed will have maybe a little bit of more room to maneuver. If they continue to show a slowdown in key sectors, they're probably going to have to act.
All right, Jeanette Garretty, Chief Economist at Robertson Stephens, thanks so much for joining us with your views today as we count down to that PCE deflator number. Let's get you back, though, to, well, outer space, as it were. There you are seeing the interior of the upper section of Starship, which is also confusingly known as Starship. And what you're seeing there is a payload of dummy Starlink satellites. There is now going to be one of the key milestones for today's test is deployment. Previous tests, we've seen Starship open and close its payload door. But the last 3 Starship flights, the door either jammed or failed to open. So this is a key milestone for this test. Opening that payload door, which is known colloquially as the PEZ dispenser, and then deploying those dummy satellites. Now, if this works, that is potentially a game changer for SpaceX. At the moment, SpaceX relies on the Falcon 9 for its Starlink satellite deployment. It can deploy a number of version 2 satellites, a couple of dozen at a time. The version 3 satellites, which are currently under development, are a lot larger and a lot heavier, but this Starship has a huge payload capability, about 200 tons, so it could potentially launch up to 60 of the version 3 Starlink satellites per flight. Which would greatly increase well, the number of Starlinks that it is able to deploy, Avril.
Right. Yeah, and as we wait to see the payload deploy demo being completed, of course, you're seeing a bit of a choppy feed there out of the rocket. But as you were alluding to, in its most recent test flight, prior to this 10th test flight, we did see Starship's payload bay door failing to open, and that actually trapped these dummy satellites that it was carrying inside the vehicle. So we do seem to see some movement now, Paul, perhaps some foreshadowing of a potential success where we see this door being able to be deployed, Paul.
Yeah, that's what's happening. The door is open and those dummy satellites are being deployed. And we saw a cutaway shot of a moment ago of the ground crew there at SpaceX celebrating. So a major milestone ticked off here. This was a very important milestone for this test flight, was deploying those dummy satellites. So confirmation now that those dummy satellites have been successfully deployed. Let's listen in.
This is just kind of a dress rehearsal for when we're going to be deploying the V3 satellites, and these are just a massive increase to Starlink's capability. Each one of them has its 60 terabits per second of capacity that's going to get added to the network per launch. That's 20 times more than what we're adding with every single Falcon 9 launch today, which, you know, step increase in capability. There goes another one. All right, so as we said, we've got 8 total that we're going to go through today. It's about a minute for each one, but looking good on payload deploy.
So you hear the cheers there at SpaceX HQ in Boca Chica. This is a very significant milestone which is being ticked off here, the successful deployment of dummy satellites from Starship. This is a real turning point. This could be a game changer for SpaceX. It's going to massively increase both the amount and capability of the Starlink satellites that it can deploy. So a big box ticked here so far. Test Flight 10 looking like a major success, April.
Yeah, game changer for SpaceX, and I think space ambitions in general out of the U.S. But let's kind of get you to some developments in the corporate sphere. Bloomberg has learned that EssilorLuxottica, the maker of Ray-Ban sunglasses, is exploring a potential deal to increase its stake in Nikon to around 20%. For more, let's bring in Bloomberg tech editor Mayumi Negishi. Mayumi, why is EssilorLuxottica interested in raising its stake in Nikon? Break it down for us.
So Nikon's value goes well beyond glasses. The two companies already partner in eyewear, but Nikon has world-class optical technology that's sort of crucial, not just for cameras, but also for semiconductors. And by raising its stake in Nikon, EssilorLuxottica strengthens ties with the company with some key tech that really could help them innovate and push the boundaries of its Ray-Ban Meta smart glasses, while giving it sort of more sway in a sector that's become really central to global tech competition. So, you know, this isn't just about sunglasses. It's about trying to tap Nikon's optical know-how that stretches, you know, from cameras to cutting-edge semiconductors to, like, really key deep tech.
There is some sensitivity around this deal, though, isn't there, in terms of some of the technology involved? Can you tell us a little bit about that?
Right. Most of us know Nikon as a camera brand, but it also makes lithography machines. These help produce semiconductors, which are in the global spotlight now because they're central to AI and defense technologies and national security concerns. So it's one of the three of the world's, basically, there are three companies that make these lithography machines, and Nikon supplies the likes of Intel and TSMC, although it's far smaller than ASML in this sector. So that's why any foreign investment in Nikon is going to require approval from Japan's finance and economy ministries. And Nikon also has historical and capital ties to Japan's powerful Mitsubishi Group. So, while it's framed as a business deal, this is going to raise eyebrows in Tokyo.
Yeah. M&A deals that could be sensitive politically as well. Bloomberg tech editor Mayumi Negeshi for us. Thank you so much. We'll be tracking the markets opening in Sydney, Seoul, and Tokyo next. This is Bloomberg. This is the Asia trade. We're counting down to Asia's major market opens. And Paul, it's really that scrutiny, the pressure that the Federal Reserve has been facing. And now it might be in for a sort of long, drawn-out legal battle. And all this playing out in the long-end bonds and U.S. Treasuries. But globally as well, there is scrutiny. There is concern that this could cause upward pressure on inflation at a time when government spending has already been in the spotlight.
Yeah, absolutely. The Fed Governor Lisa Cook saying she's not going anywhere, vows to fight back. President Trump vows to fight back. So as you say, we're heading for a lengthy legal battle here. But if you look at the market, apart from the longer end of the Treasuries curve, a bit of a shrug, really. Business as normal.
Yeah, investors, I think, expecting potentially this dovish tilt, and that seems to be playing out in the short end of the Treasuries curve. But let's take a look at the market open in Japan. Of course, we are watching out for Nvidia earnings, and after the bounce in the U.S. session overnight, we are seeing it flat on the Japanese gauges. Worth noting that the U.S. dollar, even though the decline was fairly muted, it did underperform, especially against G10. So we're seeing, interestingly, after that reversal from the yen strength just a day ago, once the news hit that Trump was moving to remove Lisa Cook, that's moving higher now, dollar yen. So that reversal is quite apparent. Keeping an eye on the 10-year in Japan as well, that is moving upwards. We do have not just the underlying inflation gauge that the Fed prefers at the end of the week. It's also about those Japan CPI numbers. And take a look, Tokyo, I should say, at what we're seeing in South Korea against the backdrop of a bit more risk appetite. We did get that South Korea-U.S. president's meeting in the U.S., and that had a positive tone. There was a deals bonanza as well, but it's really interesting to see how investors, perhaps the concerns around the chips exports restrictions, that actually meant South Korean gauges were lower just a day ago. A bit of recovery at the moment. Dollar Korea won at that 13.94 level. Paul.
Well, just open for trades here in Australia as well. The ASX are currently better by about 1/5%. We're seeing a couple of stocks getting absolutely hammered, though, at the moment. One of the big two grocery chains, Woolworths, off by more than 10% at the moment. This is never mind. Results coming in pretty much in line with expectations, though NPAT before significant items was down 20% on year. The other stock moving is Domino's Pizza, you see at the bottom of your screen there, off 14%. It was worse a second ago. We were down 16% for a minute there, reporting a net loss for the full year of just $3.7 million. But that was a big reversal on a year earlier. So a couple of major stocks moving there. The market more broadly, though, a bit stronger. A lot of focus, though, as we were mentioning earlier, on what's happening in the bond market. We did see 2- and 5-year yields slipping in the US session. We see them holding pretty steady now at the short end of the curve. People seem willing willing to buy shorter duration. Different story at the long end, though. We saw 30-year yields lifting. Investors not so keen on duration. The gap between the 5 and the 30 now the widest since 2021, and all because of these concerns over Fed independence. For more on that, let's get to Kerry Craig, Global Market Strategist at JPMorgan Asset Management. Kerry, thanks so much for joining us. It's kind of an interesting picture at the moment. We're seeing equities continuing to rally. Even the Russell in the US was moving higher. The short end of the curve seems, yields are dropping there. In terms of Fed independence, is the media more worried about this than markets at the moment?
Good morning, Paul. I think it is something that represents a tail risk to the market at the moment, but more broadly, the equity market has been supported by the earnings outlook, the fact that you are seeing still a robust economy in many parts of the world, or at least that not recession being priced in anymore. And at the same time, it's hard to think about an equity market that's going to collapse without seeing a significant trigger for it. So I think what we're seeing at the Fed at the moment is very much a tail risk. They haven't seen a huge reaction in the markets because it's new. How do you really price this in terms of what may happen when we know there's going to be potentially a lengthy legal battle around it? And so it's very hard to gauge what the exact outcome may be. So I think you're seeing some small moves there in the dollar in the US and also in the long end of the curve. But for here and now, I think the implications are really around still softening economic policy in terms of the monetary policy from the Federal Reserve. And that's being sort of viewed as a tailwind for markets.
Yeah, and more presently, as you say, in the shorter term, there are some other fish to fry. We've got the PCE numbers later on this week, and then in the middle of next month, the Fed going to hand down its decision. What's your expectation around those inflation figures, and what's the bigger concern for the Fed right now, inflation or the jobs picture?
Well, I think that the Fed has that dual mandate. They're thinking about their inflation target, the full employment. I mean, their view on full employment is 4.2%. They're at that. They have their full employment ticked off, as it were, and you've got inflation that is, in terms of headline CPI, probably closer to 3%. The PCE number is going to be moving higher, probably in our view, over the course of the release this week. And so you would argue that their inflation target is further, or inflation is further from their target, the unemployment rate. However, what we heard from Jackson Hole and Fed Powell is that they are concerned around the softness in the labour market, and so they're going to sort of support growth in this environment. I don't think a rate cut's going to do much for the economic outlook initially. I think it is going to lead to some concerns around a little bit more inflation, as will these views around Fed independence. And so I think you're likely to see the market start to reflect the potential for a little bit more inflation in the future, even if we do get those rates cuts coming through over the course of September and into the end of the year.
So how much further curve steepening are you expecting, and how is the best way to position?
Yeah, I think the curve's about 60 basis points between the 10 and the 2 at the moment. That's quite significantly steeper than it has been for some time. Again, we would be arguing that there's probably more scope for easing from the Federal Reserve. So 2 cuts this year, potentially more into next year. That should weigh on the short end of the curve. And at the long end, you are going to have some more inflation expectations being built in, or at least inflation volatility that sees those yields probably not move down as much as you may think they were. So curve steepening seems to be a pretty popular way to play the market at the moment. We would do think that having a bit of duration in a portfolio is not a bad thing, given those growth risks that are out there. I mean, there's not a zero chance of a recession happening, and it's probably a little bit above average. However, we don't want to walk too far out the curve, given some of those movements in the longer end of the bond market that we have seen. So I think it's quite finely balanced when we think about where you want to sit within the curve in terms of duration, but definitely viewing it as a steepening yield curve over time.
Kerry, we're also looking ahead to Nvidia earnings. Amid this, we're seeing Asia stocks. They seem to be running a bit higher at the moment. We have the tariff backdrop as well. India could be facing double the rate. South Korea came away with the meeting in the US from a positive tone, deals bonanza. I think we're hearing about some of these Korean companies and their expansion plans in the US as well. How are you playing South Korea, particularly related to Taiwan? Do you see outperformance there potentially?
Yeah, I think we're still quite favourable on North Asian markets more broadly, whether it's China, Taiwan and Korea. I mean, they have done very well this year in terms of their performance, so I think that's something to bear in mind. And valuations have moved up a little bit. I think the tech cycle still has more to go, and the carve-outs we've seen around some of the semiconductors being put into those deals, the offshore investment that will go into the US from some of these companies being something that will support that market. And I think secularly that AI theme is still very prominent, so we would argue that those are going to be the beneficiaries of it. Whether it's China or Korea, I think you're really coming down to a couple of companies that are driving that decision. So it's really more of a bottom-up view in terms of which of those companies you think are better positioned in this environment, rather than thinking about those countries. So I think it's a couple of stocks that really driving the decision between South Korea and Taiwan in terms of relative performance, not necessarily just thinking about the country there.
Yeah, in terms of tech in China, we've seen a pretty strong run up there, and in fact a pretty strong rally in general when it comes to Chinese equities. How's that looking to you? Do you feel there's a risk of a correction here? Does the fundamentals stack up?
Yeah, the fundamentals do look quite good to us. Obviously, there was the valuation argument from earlier in the year, and Chinese equities still look relatively well priced compared to many developed market peers. There's some appealing characteristics to the onshore market in China, given the lower correlation they have to the US equity, so building in a bit of a diversification in a portfolio. But fundamentally, again, thinking about that tech theme, Chinese tech is a way to play it that's not related to the US and some of the risks that come with that. And we do see that as being more prevalent. It is a little bit disconnected from what we're seeing in the economy as well, given the softness in some of the economic data and only the slow movement in fiscal support coming through from the Chinese government. So I think there's still room to go into China. I think it becomes quite an active position given the outlook for the economy. And again, we're seeing that bit of a split between what we're seeing in the offshore and the onshore market, where it's really the offshore market where you're seeing a lot of these tech themes being more prominent, whereas the onshore market seems to be a little bit more about dividend and income, some of the performance in the financials. So I think there's very much different ways to play China depending on what you're looking for in terms of growth versus income at the moment. But it is a market that we do continue to like in terms of where we can find value around the world and looking for continued performance.
Where are you seeing risk at the moment, and how are you hedging against that?
I mean, I think there's a way of framing how investors are feeling, and that's a little bit of sort of uncomfortably tolerant of what's out there at the moment. Obviously, markets have run pretty hard since we've seen that sell-off in April. There are concerns around some of the softer economic data that's coming out. Obviously, the political risk that's still in there. But, fundamentally, we do see a global economy that's improving, and that should support the outlook for both equities in terms of risk and nominal growth. But also, it's not huge growth. It is sub-trend growth around the world, and so we do think about duration in terms of a hedge against that growth shock in a portfolio, but also barbelling that with a little bit more of the credit space in terms of high yield, given the carry that you're getting on that, and rather than owning outright duration. The other hedges against that inflation, I think that for us really does fall to things like alternatives and real assets, where you're getting that less sensitivity to the economy, the good outcome, and obviously some inbuilt inflation protection as well. So we need to think about a broader diversification of assets within a portfolio to really counteract all the risks that are out there in the global economy.
All right, Kerry Craig, Global Market Strategist at JPMorgan Asset Management. Thanks, as always, for joining us with your views. Let's take a look at some of the stocks that are moving here in Australia. Some big moves. Earnings continue to roll in. I'll just run briefly through some of these. Domino's Pizza, we're seeing shares dropping there after posting a full-year loss, reversing the profit from a year earlier. Woolworths Group, which is one of the big grocery chains here in Australia, also falling by more than 11% now after a profit miss there and a lower dividend as well. WiseTech off 14%. This is a confounding one because it lifted its dividend. Annual profit rose 30%. Yet we've got shares lower by about 15% at the moment, so we'll await a little bit more information to explain that move. One of the positive stories, though, Tabcorp Holdings better by 22% overall.
Yeah, we're also seeing a really positive story when it comes to Nikon, and it is advancing about 12% by the most earlier in about 12 years, pairing some of those gains now. We did see those trading volumes quadrupling, and this is after sources told Bloomberg that EssilorLuxottica is said to be considering increasing its stake in Nikon. But of course, as we've heard from some of our colleagues, there are some political sensitivities around these investments. Again, we are seeing that green in the stock at the moment, that sort of outperformance. We'll have more ahead on the Asia trade. This is Bloomberg.
We have some very good people for that position, and I think we have some very good people. We're down to, I mean, I think I maybe in my own mind have somebody that I like, but I deal with Scott and I deal with Howard, and we're dealing with a lot of people actually that are going to be involved in that decision ultimately. It's a very important decision.
President Trump there after he was asked about a replacement for Fed Governor Lisa Cook following his move to oust her from the central bank. And Bloomberg has learned that the White House is reviewing options to exert more influence over the Fed's 12 regional banks. Our news desk editor Jill Desis joins us now with more. Jill, what do we know about this idea and what would the implications be if it were carried out?
Well, look, Paul, according to people familiar with the matter, what we know about this is essentially the Trump administration is trying to look for ways that they can effectively expand that influence. Now, if you're taking the Lisa Cook situation here on the Federal Board of Governors, what Trump, if he is ultimately successful in removing Lisa Cook, of course, we do expect that to essentially lead to a fairly lengthy court battle. We'll see what ends up happening there. But that would give him 4 out of 7 majority on that federal level. But then in addition to that, you also have these 12 regional bank officials, 5 of whom sort of work with the Fed on a rotating basis. The idea would be that, it shows another signal in how the Trump administration is really sort of examining those ways that it can ultimately, sort of have more authority over the Federal Reserve and sort of its decisions. I mean, we saw this begin last year. Prior to that even, with, Jerome Powell, ways in which Trump has sort of mused about potentially firing Powell or trying to get him to resign. Now it's clearly sort of extended into what the Trump administration is sitting there thinking it can do in terms of trying to get more of that influence involved with making interest rate policy.
Jill, what do we know about the legal battle potentially that we could see between Trump and Cook?
Well, at this point, Avril, we've heard from both Trump and Cook through her attorneys. She certainly says that she intends to fight this. Trump says that he anticipates a legal battle here. Again, this is a fairly unprecedented situation in the grand scheme of things. We did actually hear from the Fed, which has said that it would abide by any court decision ultimately made. But you've got two sides that are essentially arguing on Trump's side that she needs to be removed from office. This is the way to do so. And then you've got from Cook's side that she's saying that Trump doesn't have the authority to do that. So I think that's a situation that seems like it is going to play out in courts. Bloomberg Economics actually expects that it could be that Cook earns some kind of a temporary stay while this is working through the legal system that would enable her to continue sitting in on FOMC meetings and weighing in on policy. But again, it just kind of shows that you've got two sides here that really don't seem to be willing to give up without a fight. And it's something that could essentially be headed for a fairly lengthy court battle and ultimately set, I think, some really critical precedent here.
If successful, if President Trump is able to remove Cook, what are the implications here for a bigger policy shift? Because, of course, just because you've got your own governors on the board doesn't mean they're going to do what you want, Exhibit A being Jay Powell, the Trump appointee.
Yes, that's right, Paula. And I would also point out that, you've got other, Trump appointees, or even those that have, potentially you've sort of favored more immediate change to interest rate policy. Christopher Waller, for example, who's, talked openly about the need to preserve an independent Federal Reserve. That was also a pretty key theme at Jackson Hole just a few days ago, where you did have those central bankers sort of weighing in on the importance of Fed independence. I mean, that really is the thrust of this here, is this idea of if Trump and the Trump administration has more power and more influence over, appointing these appointees, does that ultimately mean something really significant for the state of Fed independence? As you pointed out, though, Paul, yes, I mean, just with as with other appointees, I mean, people have their own brains. You can't necessarily expect somebody to step into a certain position and then be a sycophant for whoever appointed them there. But I think the broader, sort of like the broader concern here is that idea of, what sort of this level of, sort of power means, what Trump is ultimately able to accomplish here. I think that there's a lot of answered questions there that might take some time to resolve.
For the moment, more questions than answers. Jill, thank you so much. Our news desk editor, Jill Desis. Now, former Fed Vice Chair Lael Brainard suggests there is a real risk that multiple Fed district bank presidents could be removed from office next year. She views President Trump's latest moves against Lisa Cook as part of his pressure campaign on the central bank.
This is not about an individual governor. This is really an unprecedented attack on the independence of the Federal Reserve as an institution. There is nobody in the Federal Open Markets Committee, the Monetary Policy Setting Committee, that can't be thinking, well, what does this mean for me? And so any member of the board, presumably, is going to worry that they, too, could be subject to this kind of political pressure. And that fundamentally undermines the institutional independence of the Fed, which means higher inflation potentially, less credibility, even higher long-term interest rates, bad for the economy.
Do you think this can actually impact how members are thinking about monetary policy?
Well, I just think the implication, if any member of that board could come under this kind of political pressure from the White House, and of course, we saw that kind of pressure on the chair earlier this year, I think that does really put a higher premium on whether they're going to be willing to speak their minds, to dissent on key votes if necessary. I think it really does create unprecedented risks.
The president in his letter talked about this mortgage allegation fraud in the mortgage world for Governor Cook. What if she was charged or convicted?
Well, I think what is important here is due process and undertaking a real investigation and having the facts on the table and the ability for her to defend herself legally. None of that has taken place here. The White House has preempted the process, and so that is why it's really unprecedented. It's very, very threatening to the very independence of the Federal Reserve, and it should cause concerns, I think, among investors and more broadly about that fundamental underpinning of our strong economy and our strong financial markets.
That's former Fed Vice Chair Lael Brainard speaking earlier with Bloomberg TV. Let's get you back now to live pictures. It is Starship returning through the Earth's atmosphere. So this is the upper section of Starship, which has completed a partial journey around the Earth. This has been an impressive return to form for SpaceX today after 2 failed attempts at Test 10. Today's test launch was successful. The booster successfully returning and splashing down in the ocean, and now we see the upper section of Starship returning through the Earth's atmosphere. Number of heat shields you see there will be put to the test today. Some of that heat shielding has been removed. There are different substances being tried in this test, but earlier we saw that upper section successfully deploying Starlink satellites through the hatch. So by all metrics, this test so far appears to have been a success. More ahead on the Asia trade. This is Bloomberg.
These are the global headlines we're following. China is sending Vice Commerce Minister Li Chenggang to the U.S. this week. The trip is seen as a sign that trade talks are progressing. President Trump extended a tariff truce earlier this month. A source says Li is expected to be in Washington on Thursday and Friday and could meet with U.S. officials and business people. The European Union is pushing back after President Trump called its digital regulations unfair to U.S. tech. He has threatened to impose tariffs and other penalties on countries that tax online services. But EU officials say it's the sovereign right of the bloc and its member states to regulate its own economic activities. Paul?
Well, we've just had Europe futures open, and that potential battle over a digital tax, just one of a number of headwinds facing Europe at the moment. You see Germany 10-year bond futures ticking up a little bit there. That is relative to France. The spread there, the largest yield premium there, the largest since April at the moment, because, of course, in France, the Prime Minister, François Bayrou, is facing the risk of a no-confidence vote, which could potentially collapse the government. So we're keeping a close eye on that. Meanwhile, Bank of England's Catherine Mann says rates in England should remain unchanged for a longer period. She feels policies not tight enough to control inflation. We've got UK long bonds closing in on a 27-year high as well, pressuring the government to rein in its spending. Got Euro stocks futures, though, higher by about 1/5%. We have more ahead on the Age of Trade. Stay with us. This is Bloomberg. Let's get you back to live pictures now. You are seeing Starship re-entering the Earth's atmosphere, heading for a splashdown in the Indian Ocean after what's been a pretty successful test so far. You can see the intense heat that vehicle is suffering, and if you look closely towards the center of your picture, you can actually see one of those flaps is starting to melt due to the heat. You might think that's a serious problem. This is partly intentional. SpaceX has been experimenting with different types of heat shielding, leaving parts of the rocket unprotected. And there you can see a severely damaged flat, various types of tile there as Starship tests the various methods of heat shielding re-entering the atmosphere there. Averill.
Yeah, and we are, of course, watching for this rocket potentially making that splashdown back into the Indian Ocean. And it's hard to overstate what is at stake for SpaceX, given the resources that it's fueled towards this project, reassignment of engineers, a couple of delays already this week, and then finally we saw that successful liftoff. And it looks like so far some of the key issues that SpaceX managed to iron out in the past couple of test flights is proving to be adding to the success of this launch and hopefully, as I said, the splashdown back into the Indian Ocean.
Yeah, we should be getting to that splashdown fairly soon, but the ship's still intact. That's always a good sign. Let's get a little bit more on this. We're joined by Bloomberg Aerospace reporter Julie Johnson as well. Julie, we'll get to you in a moment. Let's just have a quick listen in to some of the commentary from SpaceX as Starship re-enters the atmosphere.
As we were creating.
All right, we appear to have lost the audio there. Let's get to Julie Johnson now. Julie, we had, of course, 3 failures leading up to Flight 10 today. Things didn't go as planned for SpaceX. Let's just continue to listen in for a moment.
So it looks like that's been pretty successful. So, all right, we are less than a minute away from hitting transonic. Again, pretty soon our forward velocity is going to look like it's kind of falling off a cliff, and Starship will look like it's falling off a cliff as we we essentially go into our belly flop. If you watched some of the high altitude tests or suborbital campaigns, we were able to test that. It was a pretty fundamental, like, can this thing actually fly? And we were able to prove that out with that suborbital campaign. And that's what we're about to see shortly here.
All right, so there's the Starship continuing its descent back to Earth. The flap in the picture at the moment holding up pretty well. Obviously has some extra heat shielding on it. The second flap, which we might get pictures of in a moment, appears to have suffered quite a bit of heat damage, but the ship still operating as it returns to Earth. But a number of key milestones were ticked off on this flight after a series of setbacks in the last 3 tests. We did have a successful liftoff, successful stage separation. The booster did return. There was a successful engine relight, and that booster did splash down in the ocean today rather than SpaceX attempting to catch it with the booster arms, as we've seen before. Perhaps the key milestone that got ticked off was the successful deployment of some dummy satellites. So that was a first for SpaceX. That's going to allow it to dramatically ramp up its deployment of Starlink satellites. All right, now let's get to Bloomberg's aerospace reporter, Julie Johnson. Julie, thanks for hanging on there. As I mentioned there, this appears to be a return to form for SpaceX. What's your analysis of this flight?
Yeah, absolutely. SpaceX needed a mission to go without too much drama, and this one has definitely fit the bill in a good way. As you said, some key milestones, and really no explosive failures, and that had been sort of the hallmark of the recently for this spacecraft.
Julie, maybe talk us through some of the improvements from previous test flights and indeed this week that SpaceX has engaged in order to get to this stage.
Well, the biggest was, I think, just first of all, the stability of the vehicle. They'd had some issues with fuel lines, I guess failing and and leading to explosions. And the last go round, they lost control of the craft before they could deploy the dummy satellites. So I think there was a huge sigh of relief today when those 8 slabs of metal were sent out into space safely. And by the way, those will burn up before re-entering or coming back to Earth. So I think that was designed not to rain down metal. But I think that was big. They also managed to relight an engine in space very, very briefly, and we'll know more about how that performed versus expectations later. But that's important if one day they are to bring this craft back out of orbit and successfully land, on Earth or Mars.
Julie, the ocean are in view. We're just seeing Starship performing what's known as the flip maneuver, so orienting its engines towards the ocean. Let's take a look at this.
That's unbelievable.
So that appears to be a success as well. I mean, no, it doesn't look like it. Let's have a quick listen in.
Oh, man. Yeah. Farewell, Ship 37. Thank you, buoy cam. Landing flip, landing burn, splash out of the Indian Ocean. There we go. All right. That was pretty awesome.
All right, so it did explode, but that's to be expected. I mean, it just did hit the ocean. So by all metrics, that looks like a pretty successful flight. Julie, in the lead up to this, following a series of setbacks, Elon Musk threw a lot of resources at this problem. What do we know?
He sure did. And my colleague Lauren Grush and Kyle Porter had a great story on this last week. Highly recommend going back and taking a look at it if you haven't seen. But Musk pulled engineers from across, several organizations and put them on Starship to try and tackle some of the chronic problems that had contributed to this string of failures. And, pressure was intense on him, on SpaceX, and it sure looks like that team delivered.
Julie, it's really hard to overstate the success and the milestone for SpaceX as a company. We saw there those cheers going up, erupting in the crowd that were watching this launch and the successful splashback down into the Indian Ocean. Our Bloomberg Aerospace reporter Julie Johnson for us. Now, speaking of things that have gone stratospheric, we have actually seen Nikon share prices just surging past 20+% early on in the session. And this is after sources told Bloomberg EssilorLuxottica is said to be mulling raising a stake in the company. So we're seeing those really, really solid gains. But of course, as some of our colleagues have been discussing earlier in the show, there are some potential political sensitivities, domestic sensitivities relating such a potential deal. And of course, we're also in the thick of earnings season in China, with Meituan set to report later today. The firm is expected to post a big profit decline amid a delivery price war with JD.com and Alibaba. Let's cross over now to Beijing and our China correspondent, Min Lo. Min, give us a preview of Meituan.
Hey, Avril, yes, profits are expected to fall by 33% according to analyst consensus so far. As you said, the three-way fight between Meituan, Alibaba's Ele.me and JD.com. We're talking about really intense price competition, practically free milk tea, free delivery, a lot of product giveaways. That is likely to have hit the profit margins of Meituan. And so investors will likely be closely watching the exact scale of the profit losses in this quarter because JD.com just reported earnings not too long ago, and they reported profits halving, and really it's a 78% miss for profits for JD.com. Meituan is expected to fare a bit better because it's seen as the incumbent and the dominant player in the food delivery sector. But you can see on the screen that Meituan's shares has been trailing behind JD.com and Alibaba because it's seen as also the least diversified of the three companies. Its stocks share prices are down about 20% year to date so far. So something that we really want to watch. We could see potential big price moves after the earnings, and JPMorgan in particular is one of the ones that are more bearish on this stock because their forecast for earnings per share is 20% or so below the consensus.
Min, we also heard from PetroChina out with the results as well. What were the key takeaways there?
Yeah, PetroChina's results are not too good. We saw a profit decline. We're talking about net profit 48 billion yuan versus 89 billion yuan a year ago. We're talking about first half profits here, but it's not quite surprising given the big drop in international oil prices. And the company actually said that profitability was better than expected, that the profit decline was narrower than the drop in international oil prices in the first half of the year. But one of the rare bright spots for the company is its natural gas segment, because that is where we see demand increasing. In fact, estimates are that demand could increase by 40% through 2050 as China is in the midst of this energy transition, trying to reduce reliance on coal and trying to shift towards cleaner energy. And after that earnings call as well, the company's board just approved a plan for the company to buy over 3 natural gas storage facilities in China from China National Petroleum that will greatly increase the company's capacity there, and the company said it will help enhance its efficiency. But the natural gas segment really helping to offset some of the declines that we saw, especially in the downstream oil segment.
All right, Bloomberg's China correspondent Min Lo there. We have more to come on the Asia trade. This is Bloomberg. Let's take a look at how our Korean assets are tracking at the moment. A little bit softer, but perhaps to be expected ahead of that big result from Nvidia later on. The tech-heavy Kosdaq index a little bit softer as well by 0.4%. One stock in Korea that is doing very well, Hanwha Ocean, up about 2.4%. This is after announcing it's going to invest $5 billion in its Philadelphia shipyard. And this was part of the deal that was stitched up between President Lee and President Trump during that visit this week. Avril.
Yeah, we're continuing to track the deals that have been stitched up between the U.S. and Korea. The Federation of Korean Industries estimates that domestic firms could invest some $150 billion in the U.S., and that's after South Korean companies announced a flurry of deals with U.S. businesses following a charm offensive from President Lee Jae-myung in Washington. Joining us now is Seok Choi. He is senior advisor at law firm Yi & Co. He previously served as the chief negotiator for the Korea-U.S. free trade deal. Really good to see you, sir. First off, it looks like this positive tone between the U.S. and South Korea could pave the way for more cooperation. But what is your read into the extent in which we have learned a lot more from that last-minute trade deal inked out at the end of July?
Right. Actually, this is the first encounter of the both leaders in Korea and United States. And this is a quite historic defining moment for both countries. And the first encounter, first summit meeting ended with great success, I think, because they just built up a good rapport in the beginning. And the chemistry of the two leaders seems to be very good. That was a good starting point. And also they touched upon the two basket of issues. Number one is the modernization of alliance of the two countries. And second is they discussed also the outcome of the negotiation on tariff and investment, which was agreed end of July this year. But they did not go into details of these two key issues, but they just agreed broadly. They shared the similar views, the views on the modernization of alliance, and also they agreed to continue to discuss trade and tariff and investment questions. But still, there are some ambiguities. After the summit ended with a great deal of success, but still we cannot see so far any joint statement or joint press briefing from both countries. Therefore, the agreement, the atmosphere of the summit meeting was very good, but there is no written language which can be disclosed so far. And the other thing is the ambiguities surrounding the investment fund to be made by the Republic of Korea, and also other issues, for example, agriculture, market access questions. I think the positions of the two sides is divergent.
So how much certainty would you say this provides the South Korean government, and how are they likely to continue perhaps advocating for South Korean companies to invest into the U.S. in a way that makes sense for these South Korean firms as well?
Actually, end of July, Korea committed that Korea will invest $350 billion worth of investment in the United States. But there was no details were agreed upon at that time. But after the agreement was made in July, the U.S. side insisted that actually this investment is owned and controlled by the United States, and the profits coming from the investment would go to United States. 90% of the profit go to the United States. But actually, Korea's understanding is different. But right before the summit meeting started, actually a couple of days ago, U.S. would like to make this ambiguous agreement into the written languages. Then actually the moment of truth came, and both sides have different views on this, the conditions of investment. Therefore, I think this the serious consultations or negotiations should continue after the summit meeting.
You are a former trade negotiator yourself. Can you give us a sense of whether or not this is unusual and the sorts of problems that can be encountered when things don't get put in writing and each side has a different understanding of what's been agreed to?
Actually, in normal cases, after the negotiation is over, I think the written language should come out. I mean, that's a quite usual process, but this case is quite different. But this is not confined to only Korea, but actually US-Japan deal and the US-EU deal also did not produce a written agreement right after the summit meeting. Therefore, I mean, this is a style of President Trump negotiating with other countries.
All right, Seok Choi, Senior Advisor at Lee & Co. We're unfortunately out of time, but thanks so much for joining us today. We have more ahead on the Asia Trade. This is Bloomberg.
Well, we're counting down to the China markets open, but also looking ahead to a key parade next week out of China that is set to showcase the country's military prowess. And ahead of that, Bloomberg analysis has found that President Xi Jinping has ousted almost a fifth of the generals whom he personally appointed since taking power in 2012. Bloomberg's Richard Frost joins us from Hong Kong. Richard, what's going on with Xi and his generals?
Well, as you just said, they keep going missing. There does seem to be a particular strategy he's taken. As you said, almost a fifth of the generals that he has appointed, 14 out of 79, have been investigated or disappeared. Probably the most high profile was one called He Weidong, who was the second highest ranking in the PLA. We only knew that he went missing because he didn't turn up to this annual tree planting ceremony in April. And this shows the typical opacity that we see in China, raises questions about what's going on, and also cast forward to what is Xi trying to do in terms of shaping his military.
So what are people watching for next? Is this purge of the military finished yet?
Again, what happens in Zhongnanhai is always impossible to predict. But as you said, there are things that people can look for, which is occasions where you would expect to see all those generals assembled. And the most obvious one is this parade to mark the 80th anniversary of the victory over Japan war, which will take place in Beijing next week. So China watchers, they won't just be spotting new missiles, but they'll also be looking to see who's assembled in that sort of august audience there to see if anyone's missing. So that's going to be one. There's also, not long after that, there's the fourth plenum where party officials will get together to map out the next 5-year economic plan and also make key personnel decisions. That may also provide some clarity as to how Xi sees the country going forward.
Does all this in some way inform China's ability to wage conflict or war?
Yeah, I mean, it's important to note that China hasn't actually been involved in military conflict, I think, since the 1970s, when they had a brief skirmish with Vietnam. So there aren't many battle-ready veterans involved. And from the outside, repeatedly taking down generals that you've appointed does suggest some sort of chaotic approach towards war readiness. There's also the risk that military officials, if they know that there's problems with equipment, they might try and hide it because they fear that they would be next.
Yeah. All right, Bloomberg senior editor Richard Frost there. And subscribers can read that story in full on the website and the terminal. If you're on the terminal, NI, Big Take, is your function. And that is it from the Asia Trade. Markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai and Shenzhen.